Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Let's update briefly the situation in the gold market. Well, it will be a short video because currently on the high time frames, if you take a look on the daily chart, even on the 4-day frame chart, we have nothing special. So market is just keep going higher. Now it hits once again on the daily chart the overbought level, where it also stand yesterday, because overbought, you can see, is a dynamic parameter, so it changes day by day, and today it's currently around 42. So it has been completed here and touched. And of course, in the current situation, we do not have any new trading stops just because market stands bullish and you do not want to go against overall tendency that we have here. Correspondingly, the one direction that we could follow is just to the upside. We're not considering any short position for now, but since market stands at overbought, we do not have any trading stop for taking a new long position right in this moment, so we definitely will have to wait something that we saw previously on the 4-day frame chart. Here we have a sequence of the different trades, but all of them were relatively similar, that every time we were using the momentum of the previous upside action. It has happened 4 times already. So here is it's once again was successful. You can see that setup that we discussed yesterday has worked just perfect. You can see it's after retracement. Yesterday we said wait for a minor pullback somewhere to the maybe 41.10 area, 41.15 as possible position taken, which is actually might be a prediction to the minimum target around 41.35. And actually you can see that market even significantly overcome this target. Initially it was around 618 resistance, which is the minimum target of this trade, and you can see even some kind of the reaction has followed here, but market is currently moving higher. So in fact we are getting the butterfly on the hourly chart. Now it stands and is coming to the 42.04. This is first extension, first target. I would seriously think about grabbing the profit here, at least the bulk of the profit, maybe from the 50% to the 70% of the result if you're still holding the long position. Why? Because market at overbought, guys. So you can see that yesterday it was reaction on this level to the downside. Market right now stands at the same point. Together with the butterfly target, it might be enough to trigger more or less significant pullback here. And still you could keep the rest, for example 30% of your position, tight your stop higher, and you could try to hold it. Maybe we will see the continuation to the 1618 extension, which is a 42.35. So that's by our view, this is reasonable approach in the current situation. If we wouldn't have the overbought, in this case we probably could apply the softer conditions, so maybe grabbing just the 30, 35, 40% and keeping the rest for possible upward action. But in the current situation, the tight condition seems more reasonable. So once this trade will be over, we will be just watching for another trading stop on the long side if we will get something like this. So currently you can see this type of the trading scenarios. This method works really nice, and I do not see any reasons to step aside from it. Just buying on some dips on the predefined support levels. Let's be currently it's a nice idea. So probably it's all for now. Let's see what will happen tomorrow.